Testing, testing. Hey, it would have been nice if I turned the microphone on. See, it sucks getting old. The microphone wasn't on. Sorry about that. All right, so YouTube volume should be fine now. I see you got it at 21 and held for 4 weeks. Bama Redneck, what are we talking about? Walgreens. All right, Bama Redneck, catch me in a little bit, but remind me in a little bit. Okay, we'll take a look at it. Right now, we're picking on someone about O who really likes O, and I'm trying to show him all the reasons why I don't like it. Oh, wait a second. It says there are no dividends at the selected time period. Why would I invest in a company that doesn't pay dividends? That's an interesting question. Okay, and third reason, okay, so I gave you 2 reasons so far. 1, 5.9%. 2, no dividends. 3, it's a monthly. So what do I mean by it's a monthly and I don't like monthlies? Well, we all know there's 12 months in a year and it's 52 weeks in a year. So if I'm going to get a check, or if you're going to get a check, would you prefer 12 of them for a year, or would you prefer 52? Let's take a look at the 12 because it's a monthly, number one. The stock is at 53.79, so the closest one is going to be the 54. There isn't a 54, but the 55 is going for 25 cents, not enough. The 52.50 is going for 145, and if I'm buying it at 153, I'm losing $1.20, which means I'm walking away with 15 cents. Yeah, those numbers just don't work. Okay, Mikey G, how's the volume now? Indeed, Bama. All right. Hold on a second, Bama. I see you got it at 21. We're going to take a look at that in a minute. Okay, Walgreens, is that right? What happens if it drops? Okay. Okay, bam, we're going to take a look at Walgreens in a minute, okay? Hold on, I'm missing some of these questions. How do you keep from losing? Oh, we're going to talk about that. Hold tight. Comments not possible even today on Facebook. Check your Facebook settings. Continue. All right, you know what? Don't worry about commenting on Facebook. I'll have to figure that out. I have to get a new camera because that camera's always dark. And the Instagram camera's always weird. All in. Wheel strategy. Okay, I like wheel strategy. Verizon and Cisco. Okay. What are your thoughts? Previously mentioned tickers meeting RM. Okay, all in. Daisy said something. I'm sorry to interrupt your live, but I'm a novice on TikTok too. I don't see a way to send my number. Oh, wow. Oh, something in my eye. Uh, ooh. How about this for a thought, Daisy? Go to that 10-minute trader. Okay? The10minutetrader.com. It's my brand new website. Hypothetically speaking, down at the bottom, you should be able to put your email down here, or you can put your name and email information, and then you can make a comment down here. Now, I'm not 100% sure if this is working yet or not, because this is, like I'm saying, brand new. I was supposed to check it out over the weekend. I didn't get a chance to do that. Hold on. I'm just filling in the information now, see if it actually works. Okay, so my information has been submitted. Oh, and it does work. Cool. There you go. If you go to that10minutetrader.com, come all the way down the bottom, you can put your email address in. It's a brand new website. I haven't really arranged anything yet. I think the sign is okay. Not quite what I was thinking. Oh, here you go, dividend investing. Have you seen this? Okay, you need a little bit more space in between each one. Okay, interesting. All right, so let's go back to where we were. All right, so I gave you my reasoning why I don't like O. 3 reasons. Number one, it's a monthly. The numbers just don't ever work with monthlies. Reason number two, it doesn't have, what did I say? That sucks about getting old. Reason one, no dividends. Reason two, it's weekly. It's a monthly option, not weekly. Reason three, 5.9% return. So if I'm going to invest my money, I'm sure as heck not going to invest it at 5% per year return. You got to take a look. Anytime you look at anything you want to put your money into, dig deep, look hard, ask the tough questions. If Realty is so great, why are they paying 5.9%? 5.9%, in my humble opinion, is crappy. Meeting the wheel strategy criteria, all in. I don't do the wheel strategy criteria. Excellent. Okay, you like it, Mikey? Thank you. You're welcome. What did I miss? What did I miss? What did I miss? All right, I missed your residence. Okay. Don't high yield could potentially mean it won't be sustainable. Just something I've learned. Tone, you're absolutely right. However, you're missing a key ingredient. What I do here, what I say, the 5 rules, make sure it's something you want to hold on to long term. That's one. Number 2, make sure you never sell at a loss. Reason 3 is 20 years or more of increased dividends. Now, when you have a company that has 20 years or more of increased dividends, more than likely they've been in business for more than 20 years and they're making a profit every year consistently for more than 20 years, allowing you and me as the investors to get more and more money on an annual basis. So every single year it's higher dividends every year. That's one of my criteria. So if I'm looking at companies that have consistently increased for 20 consecutive years, it's not an if the stock goes down, because look, up, down, up, down, up, down. It's when the stocks go down. So if I buy here, it's going to go up, it's going to go down. If I buy here, it's going to go down, it's going to go up. Whatever, they all do the exact same thing. They go up and they go down. So if the company doesn't have dividends, is not sharing their good fortune or sharing their profits with you, why would you invest the money there? Now, for me, I'm retired and I need a safe, predictable, consistent income. The only way I'm getting that is through companies that consistently increase their share of the profits they pay out through the shareholders. That means higher and higher dividends every year. Now, if they have higher and higher dividends every year and they have weekly options, well, I'm tickled pink. Now, we checked last week because we are officially into week number 26, which is halfway through. It says this Friday is officially halfway through the trading year. Okay, so next Monday, the 3rd quarter starts. Okay, can you believe it? We're first 2 quarters already done and over with. Okay, I don't have my numbers for the whole quarter yet because, like I said, the website is still being updated. Okay, where was I going with that conversation? I forget where I was going with that conversation. Holy cow. So I was talking about the dividends and why I want companies to have 20 years or more of higher dividends. Well, when the stocks go down, see, okay, there's your high of the year, then it comes down to the low of the year, then she goes up again, then she comes down, then she goes up, then she comes down. Okay, when the stock, it's not if, when the stocks come down, I want to know that I'm getting higher and higher dividends every single year. Because it may be high here, but who's to say it's ever going to go higher than the high of the year? Okay? Because when she goes down, she goes up, she goes down. Okay, is she going to make a new high? Is she going to make a new low? These questions I really don't have to deal with. Okay, I like it when a stock is high and comes down, and I like to buy it as it's bouncing, as it's bouncing off the bottom. So yeah, high yields don't necessarily mean that. Okay, I'm not looking for high yields. I'm looking for consistency and predictability. How about you send me your number? All right, Daisy. Only way I'm going to be able to send you my number is I'll need your email or I'll need your phone number. Okay, so because all the information here on TikTok goes so fast, I can't really, you know what? See, what can I do here from here? La, 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 la. Oh, reply to Daisy. All right, there you go, Daisy. I just sent you my email. Cool. That's the first time I ever done that, so that was pretty cool. All right, everyone jump into I have no idea if that's true or not. Simone, how are you? That's a nice website. I'm working on it. So can I run a demo account of your system on Thinkorswim? San Antonio, I suggest I actually, out of all the things I could do in this world, I actually recommend something. My recommendation is download Thinkorswim on your computer or your laptop. Now, I don't get paid. There's no affiliate fees. I get nothing from Thinkorswim other than knowing that you and I, if we needed to, can communicate and we're looking at the exact same thing. That's the only reason why I like Thinkorswim. Now, I've been trading for over 20 years. I looked at a lot of trading platforms. This one I like. It has so many perks. I like it. So, San Antonio, my suggestion, if you're serious about taking control over your own money, actually all of you, if you're serious about taking control over your own money, you should do a demo account, a paper trading account. It's kind of like Monopoly, but with the stocks. Okay, find a good trading strategy, stick with it, be diligent. Now, I have found that most people spend more time planning a weekend barbecue than they do with their own personal finances. So, when I came up with the strategy for my daughter, it had to be simple, safe, predictable, consistent, and no way for her to lose. Okay, so every one of my videos you'll ever hear me, you ever see me on, I will always say, hey, this is James from Dividend Stock Talk, brought to you by the 10-minute trader. The 10-minute trader, which means it should take you less than 10 minutes a day to take a quick look at your account because you know how much money you have. Okay, you know what your risk tolerance is. You know if it makes sense or not. So when I say never buy something you do not want to hold long term, you should already know what companies you even want to look at. So we looked earlier last week. Okay, last week we looked and we found that there are 9,557 companies that we can invest in at any time we want in the stock market. 9,557. So how do you find the right ones for you? Well, I found what works for me. What works for me is safe, predictable, consistent. Okay? Safety, predictability, and consistency. I want that 1% per week. So what am I looking at? Well, this is one of my lists. Now, when you pick out your own lists, okay, I can suggest you taking a look at something, okay? The Dividend Kings. 54 companies that have continuously increased their dividends to their shareholders for more than 5 decades. 5 decades. That's 50 years or more of increased dividends year after year after year. Okay? The Dividend Aristocrats, the Dividend Champions, the Dividend Contenders, Warren Buffett's list. Between those 5 lists, there's over 300 companies that have consistently increased their dividends and have weekly options. So once you get whatever stocks you like, do your due diligence. Find out what their profit margins are. Find out what their year-to-year profit and day. How much are they earning year over year? Are they going back forward? Or are they going backwards for their profits? Are they consistently being profitable? Are they consistently increasing their dividends? Once you find out all the information that you need in order to pick a stock that you want to buy, great, put it on your list. My list consists of about 300 different companies. Let me read you a few of them and see if they ring a bell. Okay? Capital One Finance, Comcast, The Gap, JP Morgan, Toll Brothers, Lennar, American Eagle Outfitters, AT&T, Verizon, PNC Bank, Hormel, Delta Airlines, FL. What the heck is FL? Yeah, isn't that funny? It's on my list. Foot Locker. Foot Locker shouldn't be up here. All right. CVS, General Electric, Ford, Lowe's, Wells Fargo, Citibank, US Steel, Capital One Finance, Morgan Stanley, Kimberly Clark, Intel, Pfizer, Bank. Are there any of those companies that you haven't heard of? Any of them? Those are the only ones I look at. The reason why I look at them: can I run a demo account of your system on Thinkorswim? All right, Antonio, I already answered that question. Simone, how are you? Can I run a demo? Okay, San Antonio, you asked that question 3 times. A lot of people knew their life savings at it. Jessica. Now, this shouldn't be a shocker, okay? But as adults, okay, over the age of 18, you should know how to balance a checkbook, how to use a credit card, how to make automatic payments. How many hours do you need to work in order to fulfill all your bills? Okay, how much you actually have in your savings account? How much do you have for investing? How much do you have for, what is your risk factor? You should know certain things about your personal finances as an adult, but unfortunately, most people don't. Okay, what a lot of people don't know, most people have no clue whatsoever how much money they need to have in their investment account, bringing a certain amount every month in order to be able to retire comfortably. People retire 3 ways. 3 ways. That's the only way to retire. 3 ways. 1, you age out. That means you come to work one day and the boss says, hold on there, buddy, you're a little too old to be here. It's time for you to retire. That's aging out because you just can't do the work anymore. Number 2 is that you walk out. What do I mean? Well, you've figured out how much money you need to retire comfortably. The kids are all moved out. It's just you and the wife, you and the husband, however you want to look at it. You said, you know what, let's get an RV, travel around the country. Let's buy a boat, sail across the world. Whatever you want to do in your retirement, you age out. Say, I have enough money. I'm out of here. Third way to retire is when you carry your carcass in a body bag and say, he's done. There's only 3 ways it's going to happen. You're either going to walk out, you're going to age out, or you're going to be carried out. But retirement is coming for everyone. Okay, so how are you going to take advantage or take control of your own personal money? Because nobody has more interest in your money than you do. Okay, I realized that when I went into the bank. I said, all right, this is what I got. How can I retire? What do I need? And then they asked me, well, what are your bills? How much do you have? Well, if you put it here, 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 this will give you 5% per year. This will give you 4% per year. You get a 4% draw. And I'm thinking, yeah, that ain't going to work for me. Okay. Mark, AFRM. I can probably say no to that one right off the top of my head. Okay. But let's entertain you there for a minute. AFRM. Affirm Holdings. It's weekly. Cool. The chart looks interesting. Okay, the numbers 3365. The 3350 is going for $1.11. Nice. But I've never heard of the company. So it kind of makes me wonder. And the way to figure out my wondering, AFRM, is to go to Yahoo Finance. Now, Yahoo Finance gives me the details that I'm looking for. What's the number one detail I'm looking for? Right here. There are no dividends in a selected time period, which means this company doesn't pay dividends, which means that's why I've never heard of this company, because it would never, ever, ever be on my list of consideration. Sorry, Mark. Okay, so here's the thing. AFRM. All right, so here we are at $15 over here a year ago. She went up, she came down. 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 Now, Mark, let me ask you a question. How much money did you make off of this company as it's coming down? On a yearly basis, what are you getting? Okay. Summary on AFRM. Let's see what the summary says. there is no yield on it. So I'm investing in a company. I'm not getting anything from the company other than capital appreciation. And that's not what I'm looking for. I'm not looking to buy something and wait for it to go up. When I say I'm retired, that means I have no income coming in from a job. That's what I mean. That means from the little kitty or the little piggy bank that I have, I invest it and I get money on that every week. The money I make on that every week satisfies my outgo on a monthly basis, takes care of all my bills. So, do I have money to put in AFRM and wait 5 or 10 years for it to grow? No. I want weekly cash flow because, unlike some people, my bills come due every month. Month after month, I get bill after bill after bill. And every once in a while, his sister Patty comes over, rubs it in. I don't know. All right, so Mark, AFRM is a no. What about Apple, Bull, or Bear? Okay, Brett Maret. Brett Maret. Brett Maret. Apple, AAPL. Now, Apple, just to let you know, is not on my list. Okay? Apple's not on my list. Apple is on Warren Buffett's list. Now, why isn't Apple on my list? Well, because Apple doesn't have 20 years of increased dividends. Okay, Apple does pay dividends, but not 20 years worth of increased dividends. All right, so let's take a look at Apple. First thing I want to see is $209.20. That's what I could buy for first thing in the morning. Okay, there was 80 million, 80 million shares traded today. That's a lot. Okay, 209. So the closest is going to be the 210, and that's going for 140, which is not 1%. Sorry, for me, it would be a no. And also, look at where it is. Okay, a month and a half ago it was at 165, and she jumps up to 220. That's a $65 increase, which is close to what, 30-40% increase in just 2 months. There's going to be profit taking. Okay, here's the high, and here's where we are now. That's way too close to the high. She's on a downward because you get all this space down here. Because a couple of months ago, people were buying it at 165. Now it's at 200. That's a $35 profit on a $165 stock. So yeah, that's just my opinion on Apple. Can I run a demo? All right, Antonio, I answered that question already. Coffee Break Logistics. Do you have to be upgraded from trading stocks to trade options by Charles Schwab? Coffee Break, yes, you do. But here's the thing. Okay, it's easy to open up a trading account. You got to be 18. However, to trade options, there's more risk. But if you are doing covered calls only, there's almost no risk to covered calls. Okay? So it's very easy to qualify for covered call writing. You just call Charles Schwab and say, hey, this is Coffee Break Logistics. I want to invest in the stock market and I want to do covered calls only. It's very easy to qualify for it. Tone, I don't understand the risk of your trade. Please explain. Okay, the risk of my trade. Let's find a good trade and I'll show you where the risk is, because everything has risk. Okay, if you stay in bed, you're risking missing out on whatever's going to happen. You're risking a plane falling onto the house and killing you, missing a tree falling on. There's risk everywhere. Okay, there is no life without risk. Okay, you go out the house, as soon as you walk out the door, you're at risk of something happening to you. If you stay in, you're at risk of missing what's going on the outside world. You're also missing your higher probability of being of being a victim from a housing break-in or something weird, stuff like that. But there's risk everywhere. But you want to see what the risk in this trading is? Let me go back. I missed some of these questions. Simba. Wow, I missed a lot of questions. You jumped my questions. All right, I'm not trying to miss anyone's questions. They just come so fast. Doesn't how you? All right, we already did that one. Sorry. Yep. Sorry. That one. All right, did that one. Did that one. Did that one. Affirm, we already did that. We already did that. Upgrade, yep, we already did that. I don't understand the risk of your trade. Please explain. All right, we're going to find a trade. I'm going to show you one that I like, and we're going to call it Macy's, because I like Macy's, and Macy's was very nice to me this year. Very, very profitable with Macy's this year. So here's a couple of questions. Okay, Tone, this is specifically for you. The risk of buying Macy's. Okay, Macy's is a 100-year-old company. They have been in business for over a century. Okay, now, do you honestly think that Macy's is going to disappear overnight? Me, I don't think so. I think Macy's is going to be here for a while. Whether a while is 1 year, 5 years, 10 years, 50 years, I have no idea. But they've already been here for over a century. I don't think they're going anywhere. So in that manner, when I buy the stock, I don't think the company's going to go bankrupt. Well, that's one risk alleviated. Okay, that risk is gone. Okay, here's the next risk. If I buy the stock today or tomorrow morning, the stock could go down. Well, there's risk there. Okay, now, if I buy the stock tomorrow, it can go up. Well, there's risk there if I don't buy it. Okay, but my trading strategy, first thing I want to do is look at what am I going to buy it for. Because me, personally, I like Macy's. Macy's is on my list. Macy's has made me a lot of money this year. Am I telling you to buy it? No, I am not telling you to buy it. What I am telling you is I'm going to show you the numbers. All right, I'm going to explain to you what I perceive the risk to be. So risk number one. Yeah, Macy's, a 100-year-old company, could implode and disappear and fall off the face of the earth tomorrow. It could. It is possible. Okay? Okay, if you read the Warren report, you know that a bullet can stop midair, turn, and move, turn again, stop, hold up for a second, change direction, and then go again. So if you believe that BS, then you believe that Macy's could disappear overnight. For those of you who don't know what that little example was, that was the magic bullet theory that some physicists came up with when they shot Kennedy. Yep, shot him, bullet stopped in midair, turned 90 degrees, moved to the left, turned again, changed its angle, and went, yeah. You believe that BS? Yeah, I'll sell you a Brooklyn Bridge too. All right, so anyway, let's continue with the risk. The risk, Macy's could disappear. Okay? What the hell's on my floor? Okay, Macy's could disappear overnight. Okay? Macy's could go from $19.14 tomorrow morning, and then it could drop all the way down to $5 or $10, whatever. That's your risk. Okay, now if you don't invest, well, your risk of running out of money because you spend it all. Let's get away from the risk thing, okay? But I like Macy's. It's over 100 years old. Great. If I'm buying it tomorrow morning in 1914, I want to sell it to someone else at 19. I'm losing 14 off of that. So I'm still over 1%. Okay, at the 19. If I buy for 1914, sell the covered call, which is call option, at 19. Okay, I'm making more than 1%. All right, it's just simple math. What am I making? I'm making 35 cents. Well, I first have to deduct the 14 cents because at 19.14 the purchase price, I'm selling at 19 on Friday. Okay, I'm losing 14 cents. So I'm getting this right here. So I subtract 14 cents off of the 35. Now I'm left with 21. So my profit is going to be 21 cents per share. So one share is only 21 cents, but 100 shares, it's 21 bucks. 1,000 shares, it's 210. 10,000 shares, it's 21,000 or 2,100, however it is. But I'm only looking for 1%. So if I buy it and sell it first thing in the morning, I've already made my percentage because I like to do it all at once. As a matter of fact, we're actually going to do a trade. Okay. But first, before we do a trade, remember I tell you rule number 5, the numbers got to work. Well, what are the numbers? Well, here's the numbers right here. What am I buying it for? What am I selling it for? How much am I making? Well, I'm making more than 1%. Great. Where are the rest of the numbers? Well, here they are right over here on the chart. Okay. Where's the high of the year? Okay. Where's the low of the year? Where was it a year ago? Where is it now? And which direction is it going? Those are the 5 things I'm looking for in the numbers. 5 numbers. High, low, where was it? Where is it? Which direction? 5. There's a lot of 5s here. Okay. So I like the 1-year chart. A year ago today, we're at 1548. Now we got a double bottom at 1049. Look at this. Mid-October and again in mid-November. That was the low of the year. Okay, the high of the year was in mid-March. Okay, and that was 2210. Now, if any of you remember, back in March, there was a buyout offer on Macy's. Somebody came in and they wanted to buy out Macy's. And Macy's says, no, we don't want to do that crap. Well, because I remember them saying they would go as far as buy back their shares at 24 just to keep their company. All right, so that being said, here's your high, here's your low, here's where it was, here's where it is, and this is the direction it's going. Okay, fine, dandy. The last 30 days. Now, why do I find the last 30 days to be the most important? Well, because the last 30 days gives me an idea of direction. Okay, now I'm trying to guess if I buy it tomorrow morning, where is it going to be on Friday? That's only 4 days away. Now, by looking at the chart, that tells me what you and I are thinking when it comes to this company, because you and I create all of this mess. Okay, we decide when it's too high and we sell, and then when it gets to a certain point, we buy, and then it starts going up. Okay, once it gets up, we start selling, take our profits. Once it's down, we buy again, and it starts going up. That's all it does. It goes up, it goes down, it goes up, it goes down. That's all it does. Okay, so 30 days ago, here we are at 2020. 3 days later, we're at the high at That should be fine. I don't know how the heck it turned off. The battery could be dying. I don't know. Could be. Um, all right. Well, let's just do the best we can with what we got. All right. All right. Intel. Yep, I like Intel. All right. Kirby. Hello. All right. Yep. Microphone number 2 is charged. All right. So we'll use microphone number 2. Okay, Mikey G, how's that? All right. Yep. See the lights on. Okay. So, la 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 la. All right, Peter. Wait. You're buying the stock at a share price of 1914 and you're selling the 19 calls? Yep. Peter, let's go over that one again and I'll explain to you why. Uh-oh. Which one were we looking? Oh, we're looking at Kohl's. Nope. Which one were we looking at was 1914? Who remembered that one? Damn it. But the reason why, Peter, what you missed, as I was buying the stock, okay, I was buying the stock at $19.14, correct? The premium I was collecting at the $19 strike price was, I believe, 35 cents per share. Okay, so if you take the 14 cents at the 1914, okay, remember, buying at 1914, selling at 19, that's a 14-cent loss, correct? Well, the premium I'm collecting is 35 cents per share. So you subtract the 14 cents off of the 35-cent premium, that leaves you with 21 cents per share. Okay? 21 cents per share is more than 1%. Macy's. Okay. Macy's at 110, 109. No, it's not, Peter. Let's take a look at the numbers. The last trade, right? The last trade of the day today was $19.03. The bid is 1901. That means if I have the stock and I want to sell it, that's what I'm selling it for, 1901. If I want to buy it, I am paying the ask for 1914. Okay, so there's the last trade of the day, the bid, what I can sell it for, the ask, what I can buy it for, the volume, how many shares traded today, the open, 1840, the high of the day, 1913, the low of the day, 1826. All the numbers right there are up for the stock. Okay, now the options are down here in the option chain. Okay, 16, 1650, 17, 1750, 18, 1850, 19, 1950, so on and so forth. Okay, so if I'm buying it at 1914, selling it at 19, yes, I'm losing 14 cents per share. You're absolutely 100% correct. But I'm also collecting 35 cents a share for the option that I sell to whoever wants to buy it from me at 19. So I'm selling for less than I paid for it, but I'm collecting 35 cents per share, and that's 21 cents a share more than what I paid for it. And 21 cents a share is more than 1% of a $19 stock. I'll give you the exact number. 0.21 divided by 19 comes to a grand total of 1.1%, to be more precise. Okay, so I'm not losing money. I'm still gaining money. And that's the main objective, a safe, predictable, consistent 1% per week. So if I'm buying it at 1914, selling it at 19, collecting 35 cents, I made my 1%. Whoever bought it from me is going to be happy because they're buying it at 19 rather than the 1914. Little do they know, they already paid me the 35 cents up front. So I still make my 1%. Uh-oh. Okay, Peter, yep. All right. Where do you get your list of companies from? Raul Nunez. You ready? You got a paper? You got a paper and piece of pencil? A piece of paper and a pen, pencil, crayon, mascara. All right, whatever. Now, you ready? Here we go. Dividend Kings, 50 years of increased dividends. Dividend Champions, 25 years of increased dividends. Dividend Aristocrats, 25 years of increased dividends. Dividend Contenders, 10 to 24 years of increased dividends. Those four lists right there will give you over 300 companies that have consistently increased their dividends every single year. Okay? I like to throw in Warren Buffett's list too, because if it's good enough for Warren, it's good enough for me. Next question. No sound on YouTube still? Really? That can't be right. Hello? It seems to be working. It seems to be working now, working now, working how, working wow. Okay. All right, it should be working. The game was to sell higher calls. Not necessarily so, Peter. Okay. My game or my idea, safe, predictable, consistent 1%. If I sold the 1950s, yeah, I'd get my 1%, but the stock has to move up. Okay, I don't want to hold the stock. I really don't. I just want the 1%. So if I buy it at 1914, that's we can't argue with that anymore. Okay, the price is 1914. What is up for discussion is what strike price do I sell? Do I sell the 22? Well, it's getting 0. Okay, do I sell the 20? Well, it's getting 7 cents. Do I do the 1950? Well, that's getting 18 cents by 22. I might get the 1% out of that. But the stock has to move up 36 cents in order for me to be back, to have my cash back. Okay, so I'm buying it first thing in the morning. Well, I want my money back. I want my return, and I want my money back so I can do it again. So if the stock goes up, great, I'm out. All right, so I make more than 1%. That's not what I'm looking for. I'm not looking to rely on the stock to have to move up. At the 19, right? If I'm buying at 19 and 14, selling it at 19. I understand that I am selling it for less than what I paid for it. I understand that. But whoever is buying this 19 option from me, they are paying for that privilege. And that privilege is costing them 35 cents per share. So at 35 cents per share, I get that immediately. I don't have to wait for that. So if I do this thing tomorrow morning, yeah, I got to dish out 19.14 per share, but I'm getting 35 cents per share instantaneously. Right to my account, right to my debit card, into my credit card, and I can use it right away. So why would I do it? Well, number one, if the stock goes up, I make money. Okay. Number two, if the stock goes absolutely nowhere, does nothing, I still make my money. The stock can even come down a little bit and I'd still make my money. Now, what you talked about, if I buy it at 1914 and sell the higher strike price to 1950, well, I get my 18 cents right off the top. Okay, great. But I don't make any extra money unless the stock goes up. The stock stays the same, I don't make any money there either. Stock goes down, I don't make any money there either. So I like to have the odds and probabilities in my favor. If I buy it 1914, sell the 19th, I understand the 14-cent loss, but the 14-cent loss is offset by the 35 cents that I'm collecting. Okay, hopefully that answers that question. Wait, theta is on your side when selling calls. Yep, that's correct. Get 100% is great concerning compound interest. Yep, I agree. Sent you an image of 5,000 on 3M. Okay, good. Thank you for that. No audio on YouTube again. Really? I just fixed it. No audio on YouTube. It says it is. It seems to be working on my end. Instagram. Okay, hold on. Instagram. James, isn't it enough that the numbers work for you? Isn't that more important than the company has increasing dividends or not? Nope. Absolutely not. Because when it comes to companies for my consideration of the investment of my hard-earned money, I want to make sure who's ever running that company is doing a good job. What is one way of measuring how well of a job they're doing? Well, how consistently are they being profitable? If they're consistently profitable, they're going to consistently increase their dividends. It's kind of like it just makes sense to me. I do not invest in companies that do not increase their dividends. We're talking about 300 different companies to look from. Now, 300 companies, it means I always have something to look at every single week. Pete, I sold cash secured puts today. All right, Pete, good for you. Instagram. All right. Love dividend stock. Tyrese, me too. Cobbler 21. Sir, how are you? Good. Can't you double your ROI by selling puts, exercising it immediately, and selling calls? Good. There are lots of ways to tweak here, tweak there, do this, do that to increase your returns. And there's absolutely nothing wrong with it if that's what you want to do. Now, I've said it over and over again. This is a trading strategy I taught my 9-year-old daughter. I do not change it. I keep it the exact same because you're here, you're new. All right. I'm assuming as soon as you learn everything you need to learn, you'll move on to something else. Great, no problem. But there's always people coming in after you. And if I'm teaching the same thing over and over and over again, there's an old saying that I grew up with. If it ain't broke, don't fix it. If it works, leave it alone. So the 5 criteria, it has to be simple. It has to be safe, predictable, consistent, and no way to lose. If you have a problem with 50% per year for 10 minutes a day, I really can't help you out. Seriously. And this is not for everyone. Okay, yeah, it takes 10 to 15 minutes a day. Once you understand it, it's relatively easy. And before the night's over, I'll go through a sample and show you how quick and easy it's going to be. But right now, as I'm explaining it, it takes a little bit more time. What do you get the share price of the day? All right. Good. Can't you double your money by selling puts? Yeah, you could. Exercising and selling calls, maybe. Or do you get the shares on strike date? No. Billy Idol. Yep. Thanks, Billy. So why not just invest in these companies that increase profits forever? Well, Alan, it's a good question. Let me give you a for instance. Look at Macy's. Okay? Macy's, 1914, what's the purchase price? I can buy it, sell it, I get 1.1%. All right, we've already figured out the math, 1.1%. All right. That's 21 cents. Okay, great. Let's take a look at the dividend for Macy's. Okay, the dividend for Macy's, that's last year, so I want to go to this year's. The dividend for Macy's is 17 cents. So let me ask you a question. If I buy Macy's and just collect the dividend, I'm collecting 17 cents every 90 days. Or do I want to buy Macy's first thing tomorrow morning at this price, sell someone the rights to buy it from me for this price, and collect 21 cents a share profit for the week, not 90 days? Okay, great. So if I do this tomorrow and I make my 1%, let's go to the calendar. Okay, let's say hypothetically I buy it and I collect my premium. Great, I got my 21 cents. Okay, I can do it again and again and again and again, week after week after week after week. That's why I like weekly options. They do it every single week. All right. Okay. But some people actually don't mind buying the stock and just collecting that 17 cents once every 90 days. But let's go a little bit further than that. Let's take a look at this information right here. If I bought Macy's, okay, if I bought Macy's and held on to it forever, like you're saying, the dividend is 69 cents for the year. The rate of return that I would be collecting for my investment into Macy's is 3.8%. Now, I admit freely that I did not go to college. I was not a Mensa student. I was not a top of my class in math. Nope. I was the top half of the class. Maybe somewhere down no. Wasn't the brightest student of all. But I do know I do know that 21 cents a share on a weekly basis is a hell of a lot better than 17 cents a share every 90 days. I also know that if I do it every single week, week after week after week, I can get 50% per year a return on my money, not 3% that Macy's is paying. Okay, Macy's has been in business for over 100 years. Okay, they're not going anywhere. I consider them to be a very safe bet. But the dividend is what the dividend is. That's your share of the profits from the company. Yeah, and it goes up every year. Great, fine, dandy. But the premium, if I buy it at 19.14, sell from 19, I get to collect 21 cents a share on a weekly basis, not an annual basis. When is the next class? None of your business. I have no idea. Okay. Want to watch on YouTube but no audio. Okay. Someone keeps saying there's no audio on YouTube. All right. All right. None of your business when you say when's the next class. Well, I teach. This is my class. This is my classroom. I teach here. You ask a question, I'll give you an answer. That's simple. I believe next week we're going to actually incorporate a phone number so some of you guys can call in. But we'll have moderators, so you have to get by them first before you get to me. All right. I don't understand Chinese, but I do appreciate that. I don't know if that's Korean, Chinese, Taiwan, whatever. Instagram. Is it enough? The number, okay, work. Okay, yeah, we already got that one. Bet you traded MLGO. Yep, no. Karis, I didn't. Never even heard of them. SFBS, never heard of them either. Oh, Realty thoughts. That's a no. It's the third time somebody's asked that question tonight on O Realty. It was a no earlier today. It was a no now. And before 11:30 tonight, it'll be a no again. What are your thoughts on VXRT? Never heard of it. So the question is, if I've never heard of it, now think of this for a second. Okay. Now, I'm not meaning insulting you or anything whatsoever, because sometimes people just don't know what they don't know to ask. So when you bought VXRT, let's bring it up real quick. VXRT. Well, number one, it's 74 cents. Number two, it has monthly options. Number three, how could it possibly have 20 years of increased dividends if it's only 74 cents? DG Crypto. So when you look at them, how many shares do you buy of stock? Well, it really depends on the price. Let's say hypothetically I have a $100,000 account, right? And I buy 5 different companies. Well, that's 20,000, 20,000, 20,000, 20,000. If the shares are 74 cents a share, like this thing, I'll buy a bunch of them. Great. If for $100 a share, well, I'll buy less. If it's $500 a share, I'll buy even less. Okay, but I like to keep my trades all the same. If I have 5 positions, well, it's 20, 20, 20, 20. If I have 4 positions, it's 25, 25, 25. Okay, I don't pay favorites with stocks. If the numbers work, I'll buy them. It's actually that simple. So VXRT, never heard of it. Okay, it'll probably never make my list. Okay, this is a stock that you would buy in hopes that it goes somewhere. Because right at the moment, it's at 74 cents. What the heck am I supposed to do with a 74-cent stock? Okay, and don't say buy a whole bunch of them, wait 10 to 15 years for it to move up. Yeah, I don't have that kind of time. My bills come due every single month. And if you think I can buy 74-cent stock and have it go up enough to take care of my bills for the month, yeah, fine, dandy, I'll do it. But there's no dividends. So it's a no. Did you reply on Amazon when other room? Amazon's a no, Daisy. Sorry. Amazon doesn't share its profits. Now, if you like Amazon, okay, you put AMZN, let's put it in here. AMZN. Okay. There's a couple of things I dislike about Amazon. Number one, they don't pay a dividend, which means even if they're making money, I'm not seeing any of it. Okay. Reason number two is at the high of the year. Okay. I don't ever buy at the high. I buy at the low. Let's take a look. Okay, take a look. She goes up, she comes down. She goes up, she comes down. She goes up, she comes down. She goes up. Where's it going next? Well, it's going down. Okay? That's plain. It's plain to see. Up, down, up, down, up, down. Follow the trend. What is the trend? Well, tomorrow's going to be basically a lot like today. Okay? That's why I look at the 30-day chart. Where does it most likely look like it's going to go? Okay, here's the last 30 days. Plain to see. Look, here's the 30-day bottom. She went up, she came down, she went up. Oh, look, here's the 30-day top. The 30-day top was today. What makes you think that if today's a 30-day top, tomorrow's going to be higher? If you don't take your profits, the market maker will take it away from you. And nobody ever went broke taking profits. Just started your strategy today. Pretty excited. JWH 119. Cool beans. CLF. Interesting. Daisy Poppy. He said no dividends. Thanks, Jessica. Thank you, sir. Mikey G. WBA. We're going to get to WBA. I want to answer some of the questions first. Good. Hey, James, would you mind taking a look at Pool? Huge loss today. Sold calls 714 has almost a 10% ROI. Okay, good. I've never heard of Pool. Seriously. So if I've never heard of them, it's a big fat no. A couple of reasons it's a big fat no. Reason number one, it's over $300 a share. Reason number two, it's a monthly. Monthlies never pay. Reason number three, she's in a downfall at the moment. If you really like it, okay, your 30-day bottom was yesterday or Friday. Today, she was a little bit up. Okay, why you sold puts on it is totally beyond me. Oh, you sold calls. 719 had almost 10%. Okay. Also, well, Jerry, we haven't gotten to Walgreens yet. People keep asking me questions about Walgreens. How do you find the numbers? None of your business. How do I find the numbers? Well, they're right here. Okay, you put a stock symbol in. Okay, it'll tell you what the last traded price was. Okay, any trading platform. Okay, you go to any trading platform. All right, just the stock symbol in. It will tell you the last traded price, the bid, the ask, the high, the low, the open, the close, the volume, and then underneath that is the option chain. What are the options looking like? Those are the numbers. Justin, when you sell a 19, take 14-cent loss, is that considered capital loss even with the premium? No, it's not, because it's actually a profit. Jerry Bad Blue Eyes, I think he was looking at it early. Yes, I was. Jerry Beard, you have to do a public records request. I have no idea what you're talking about there. I must have missed it. Blue Eyes, I have no idea what he's talking about. Just Alan. Yes, the sound. I have sound on YouTube. Okay. Would you buy a stock a week before earnings? I honestly don't pay attention to the earnings because I've seen positive earnings where the stocks go up. I've seen negative earnings where the stocks go down. I've never seen earnings that are 100% accurate all the time. Can you do CLF? All right, John, we'll write CLF, but most likely won't get to it today because we're at 11 o'clock right now. CLF. Okay, these are all the stocks you guys asked me to take a look at this week. Currently, we are right over here. Okay, we're right here. We have all these to do and then all those to do. And then you guys keep throwing more at me. So we'll get to them eventually. Okay, what are your thoughts on VXRT? That's big fat no. All to trade options, you have to first time you have to apply to your broker. Yep, that's right. Mr. Allen, clarify it makes sense, but the profit. Hey, Justin, I'm not understanding this. Just to clarify, it makes sense, but the profit here. More curious about for taxes. All right, Justin. My personal opinion when it comes to taxes, if you're going to do this on a serious basis, you have to set up your account properly from the beginning. Talk to a tax strategist, talk to a tax planner, find a way where you can legally pay the least amount of taxes legally without getting in trouble. Okay? That big fat book, that 22,763 pages of IRS codes are specifically designed so that you don't have to pay taxes. A lot of people don't want to read it and get into it because they find it too much effort, which kind of is. Taxes. All right. DK Crypto. So you buy how many shares of stock, or are you just buying calls? No, we're not buying the calls. We buy. Keeps moving around. All right. Okay. Crypto. We're not buying calls. We're selling calls. Buy the stock first, and then you sell the calls against them. How much should I start with? Jan, my suggestion, what I suggest to everyone, get yourself a paper trading account, which is virtual account, which means monopoly for the stock market. Try it out first before you put real money into it. Once you get it down pat and you're good doing monopoly money in the stock market, okay, because they do have them available. You can go to Google, paper trading account or virtual trading account. There's a whole bunch of services offered. As a matter of fact, Thinkorswim offers it. Okay, I have been paper trading for over 20 years and I still continuously paper trade because I do make mistakes. But Jan, I'll tell you the same thing I tell everyone else. If you want to call and talk to me, drop me off your number. I'll give you a buzz. How long have you been doing an option game? Well, believe it or not, I've been doing options almost 20 years now, John. Almost 20 years. Audio is great. All right, Mike. Audio is good. I put that comment like an hour ago. Yeah, sorry, Picaris. Do you ever compromise on criteria? Sure, I do, once in a while. Mo, it's Altria. I really want to start. How can I do that? All right, Scorpio. You want to start? DM me with your number. I'll give you a buzz. We'll chat, see if it's right for you. It might not be right for you. Okay? Hope you know how to DM. DM me your phone number. I will call you in the morning. We will chat and go from there. Why not buy a call leap and sell a short against the synthetic covered call? 5 years. I actually do that, but not here. John, here's a tip on SPY. If it goes up in the first hour or two, buy a put. Do the opposite if it's down. That's a great advice. Jonathan, how's it going? Cool. Santonio. On Thinkorswim, there are several options. Download desktop or launch web. Yeah, I like to download. I like to download it onto my personal computer. Okay. I don't like the online version, and I definitely don't like the mobile. The mobile is way too congested for a freaking phone screen. NTR 86, how are you tonight? NTR. What dividend stocks you like? Macy's, Walgreens, Kendo. What are your favorite dividend stocks? Any suggestions to buy now? All right, Kendo, I can tell you what my favorites are, but I can't give you an idea which one's right for you. Boy, Amazon flipped the script today. All right, Craig, County Rocket Football. Yeah, I don't do Amazon. They don't pay dividends. Okay, strictly dividend stocks only. Thoughts on SMCI? That girl. Ooh, I like that show with Sally Fields back in the 60s. Was that? No. That wasn't that girl. That was the Flying Nun. Who was that girl? I know she was a brunette. All right, so SMCI. SMCI. That's going to be a no, that girl. Sorry. I don't do stocks over 300 bucks. Actually, I don't do stocks over 250. But if you have the money to buy an $826 per share stock, more power to you. I'm just not there yet. Just in time web. Starbuckies, huh? SBUX. It don't look like it's getting 84 anytime soon, dude. Okay, Starbucks ready to 84? Yeah, I don't think so. Uh-oh. I'm not very good at this thing. I keep missing questions. Jonathan, how's it going? Think of swim several options. Use correct NTR. What dividend stocks you like? What are my favorite dividend stocks? Macy's, Marathon, Walgreens, Kohl's, General Motors, Comcast, JD, Emerson, Gap, Capital One Finance, Paramount, Alcoa, Morgan Stanley, and a bunch of others. Okay? All right, so where were we? That girl, thoughts on SMCI? Didn't we just pull up? Yeah, SMCI was going to be a no, too pricey. Starbucks, just in time web. Hola, Senor James. Could you please look at ticker RAFA? I also wondered what you think about the chart. RAFA, RAFA. Nope. Sorry. Yeah, that's absolutely horrible. Think about it. 42 cents and it's down to a nickel. That's throwing money away, dude, in my humble opinion. Okay, and I don't do speculation. Okay, I am way past that point in my life. This point in my life, I want safe, predictable, consistent. That's all I want. So Rafa is a no. Yeah, rough. It doesn't look like, yeah. What is your favorite night yield dividend stock? It'd be Macy's. I told you it was garbage, and that buffer didn't even know why he owned it. And they sold after. Okay, far left. Teddy the Grump. John G. Marlon Thomas. Marlon Thomas. Oh, Marion. Is that Marion or Marlon? Marion Thomas was that girl. Thanks, John. How do you find all your stocks with dividends? Oh, didn't we go over this earlier? You ready? Really quickly. Really quickly. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. Right there. 400, wait a minute, no. 300 different companies that have increased their dividends consecutively. What do I think about Microsoft? I like Microsoft. Welcome to Free Energy. You now post. Okay, good. I believe Marion Thomas. Okay, thanks, Secretariat. Alrighty then. Demood, how are you? So now it is 11 o'clock. Just for the fun of it, let me quickly show you how quickly I go through and why I call it 10-minute trader. No, Marlo Thomas. That was her name, Marlo? Nothing wrong with having a name Marlo for a girl. Okay. All right. You guys ready for this? Are you ready for this? I don't know who sang that song. Let me check it out. All right. You ready? Now, when I tell you, you need to find a good quality stock. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. That's over 300 different companies that have successfully increased their dividends consistently. Okay? Consistently increasing their dividends. Why? Because if they're good, if they are successful, if they know what they're doing and they're consistently profitable, well, they're going to consistently increase their dividends to their shareholders. That's what I'm looking for. There's over 300 of them that fit that criteria. So first thing I want to do is I want to take all those 300 and throw it into the calendar. Why the calendar? Well, the calendar will tell me exactly what I'm looking at this week. Let's think about it. What did I buy this week? I bought 2 companies this week. That's it, just 2. There's 9,557 companies in the stock market. Why did I only buy 2 this week? Well, only 2 of them had a dividend coming up in 2 weeks. And they have consistently increased their dividends. And they have a tendency to go up before the EX date. What is the EX date? Well, there's 4 dates to remember. Date number 1 is the announcement date. Right here, see it? Announcement date. That's when the company tells you, hey, we made this much money. This is how much we're giving you. That's the announcement date. Date number 2 is the EX date. That is the last day the stock trades before the dividend is paid out. Okay, so they tell you when they're going to give you, they tell you how much they're giving you a dividend and when. Then they tell you when is the EX date. So you have to buy the stock before this date if you want to collect the dividend. I had to turn 700 into 20,000 by Friday. What am I buying? Lottery tickets? Dude, I can't help you out, buddy. Dividend record. Date number 3. Whoever owns the stock on the dividend record is entitled to the dividend. The date of record. Okay? Date number 4, the payment date. Self-explanatory. You own the stock if you're the registered owner, you're entitled to the dividend. 4 dates. Announcement, EX, date of record, and then payment date. All right, so if, hypothetically speaking, right, we're here, actually we're here, but if we were here, I would be looking at these stocks right here. CAH, Cardinal Health, Comcast, American Express, Cisco, General Dynamics, JP Morgan. Okay, so let me show you how quickly, what calendar do you use? All right, San Antonio, you can go onto Google and put into the search bar EX dividend calendar. and a whole bunch won't pop up. But if you open up an account on Thinkorswim with Charles Schwab, it's already included in there. That's one of the reasons why I like it. Dennis, I online have 700. I have no idea what that means. Wrong channel for that. Yeah, he's definitely wrong channel for that. Number one, I don't make suggestions. Number two, I don't tell anybody what to do. I just show you what I'm doing, what's working for me. Whether you guys want to take a look at what I say and then do your own research, that's what I suggest. Okay, so let me read some of these companies to you and see if they make sense. Cardinal Health, Comcast, American Express, Cisco, General Dynamics, JP Morgan. Those are the only 6 companies I want to look at this week. The only 6. Okay? Last week, what was it? John Deere, Mendelez, MDT, which is that micro data technology, something like that. And then Nucor Energy. Okay, those are the only ones I wanted to look at last week on this particular list. Now I have a bunch of different lists. I looked for the calendar and Thinkorswim, but couldn't find it. Simone, how are you? All right, Simone, ready? Hold on a second. I'll make this quick for you as I get distracted from what I'm doing. Just for you, Simone. All right, Simone, you see this line right here? This vertical line, okay? That you can click on it, and when a double arrow shows up like this, you can left click on it, and you can move it any direction you want. See? Okay, there's also a little tiny arrow smack dab in the middle of that vertical line. All right, so if I click on that little tiny arrow, look what happens. It automatically adjusts that direction. I click on it again. Oh, look, it's back again. So where can you find the dividend calendar on Thinkorswim? Well, the reason I pointed out this line here, on the right side of the line, you have the top row. It says monitor, trade, analyze, scan, market watch, charts, tools, education, help. Okay? Once you find those, you click on Market Watch. Once you click on Market Watch, the very next line down is going to say quotes, alerts, visualize, financing rates, calendar. Right there. All right, the calendar is one down from the top row. Yep. Work. Dennis Durante. Work and make another 900. I don't know. We're still picking on him about that. I want to make a couple thousand off of $700. Well, horse races. There you go. Is it going to drop more? Leo, I have no idea what you're talking about. What's going to drop more? Do you ever do this with non-dividend stocks? No. Sorry, Jimmy. See, I have 6 different accounts. I share 2 of them publicly. This account right here is the exact same for the last 15 years. Safe, predictable, and consistent. That's it. Safe, consistent, predictable. Do I do anything else that I did not mention? Well, I could, but not here. Here, I want to keep it the exact same as it was 15 years ago when I first came up with it. If I keep changing it, then the new people aren't going to learn as easily. Why not do that with non-dividend stocks? Jimmy, let me ask you a question. Okay? When the stocks go up, great, fine, dandy. When the stocks go down, what am I collecting? Okay? Where is the consistency with a company that doesn't pay a dividend? Where is it? There isn't any. Okay? I want safe, predictable, consistent 1% per week. I cannot get that with a company that doesn't pay dividends, first of all. Okay, so why? All right, Jimmy, look at it this way. You have 2 different kinds of companies. Well, actually, you have, a bunch of different. Well, let me see if I can break it down for you. You have private companies, which you can't buy stock in. You have public companies. Now, out of the public companies, there's 9,557. We looked last week. It keeps going up. It's probably more now. Last week when we checked, 9,557. Out of all of those companies, well, you know what? Let's do this. All right, right now we're going over to FinViz. It's a financial visualization website. Gives a lots of good free information. Not everything I want, but a lot of free good information. Now, what I want you to look at, okay, Jimmy, what I want you to look at right here. This is how you break down all the stocks, okay? You can go by exchange, market cap, earnings date, price, index, dividend yield, average volume, target price, all these criteria you can take to look for your stock. But why did I bring this up? Well, I brought this up for one reason only. This number right here. Up 9,548 companies this week. Okay, right there. 9,548. So out of all of those companies, you're going to have basically two different kinds. A company that will share the profits with their investors, and companies that will take all their profits, put it back into the companies for future capital growth. So here's the part. Let's pretend, put on a pretend hat. Come on, boys and girls, you can do it. Let's pretend. Put on pretend hats. We're walking into the stock market as if it was a grocery store. We walk in and we see dry goods over here. We see meats and vegetables over here. We see tires. We see batteries. We see dry goods. Everything. Okay, every single company you can possibly imagine is there. You walk into the store. And there's an aisle slap down the middle. Okay? To the left, companies that share their profits. To the right, companies that do not share their profits. I'm at that age in my life where I need consistent cash flow and I don't want to go to work for someone else. And I don't feel like starting a new business. I am starting a new business, but that's besides the point. Okay? Your choice as an investor. You can put your money into a company that is going to share their profits with you, or a company that is going to take all the profits, dump it back into the company for future growth. That's the choice. Where do you want to put your money? Me, personally, I want a consistent weekly cash flow. The only way I can get that is by companies that share profits. What is that? That is dividends right here. So there's 9,548 companies. Let's see who pays a dividend, which is a positive dividend. Just no number, just positive, not a negative. Okay, now out of that 9,547 or 48, only 5,415 companies share their profits. Okay, we didn't even put a number to it yet. So let's put it to, let's say we want 3% or higher. Okay, so 3% or higher, well, there's only 2,519 companies that have a 3% yield or higher. Well, let's see if we go a little higher. Let's say a 5% yield. Ooh, that's nice. 5% yield, 1,240. That's still a lot of companies to pick from. How do I choose? Well, how about this for an idea? Remember, I like options. Well, over on this side, look, options. Okay, so I want to do stocks that have options. Okay, click that. Uh-oh, look what happened. 655 companies actually have options and have a 5% or higher yield. What do I look for? I look for consistently increased dividends and weekly options. That's my only two criteria. Now, those two criteria gives me over 300 different companies, and I stick them into the calendar. Why? Well, because the calendar is how many trading days a year? It's 266. Well, there's 4 quarters: January, February, March, quarter 1; April, May, June, quarter 2; July, August, September, quarter 3; October, November, December, quarter 4. Now, interestingly enough, okay, quarter 1 looks the exact same as quarter two, which looks the exact same as quarter three and quarter four. So let's, for the fun of it, go back to January. Okay, here's January. Okay, so remember, January is first quarter. Okay, first week of the first quarter. You ready? Comcast, Cisco, American Express, Bristol Myers Squibb, JP Morgan. Okay, great. Let's look at April. Oh, could that be right? Comcast, Cisco, American Express, Bristol Myers Squibb, JP Morgan. Wasn't that the exact same as it was in January? But wait, hold on. If you order now, we'll double down. You get 2 for 1. Okay. July. You ready? July. Comcast, American Express, Cisco, General Dynamics, JP Morgan. That's the first week of the third quarter. Do you see? Every 90 days, the exact same companies pay over and over and over again. Okay, so every 90 days, I look at the exact same stocks. All right? So, you guys are all new here. You ain't fed up with it. You ain't tired and seeing the exact same thing. Wait, what do you mean ConocoPhillips every 90 days? Cisco, JP Morgan, Comcast. Yeah, that's July. Okay? Hormel, PNC, AbbVie, Abbott Labs, Procter & Gamble, Caterpillar, Kinder Morgan, Citibank, Intel, US Steel, Wells Fargo, Bank Mellon, Pfizer, Lowe's, Ford. Come on, you guys, you've heard of every single one. Those are the only companies I do. Why? Because they've been in business a long time and consistently increase their dividends. And they consistently give me 1% or more every single week. Lenore Allen, Allen Cook, how you doing over there in Facebook land? All right, so that's the reason, that's why I do it every 90 days. So what we're going to do really quick, are you ready? I'm going to show you how quickly I go through a list of stocks. Okay, what list are we going to go through? Right here. Ready? This week right here. Cardinal Health, Comcast, American Express, Cisco, General Dynamics, JP Morgan. Now, I'm not going to take any questions. I'm going to breeze through it really quick and show you how quick and easy it really should be. Because whatever you do, please do not make it any more confusing than it needs to be. Simple, safe, predictable, consistent, no way to lose. Number one, never buy something you don't want to hold long term. Never sell at a loss. Make sure there's 20 years or more of increased dividends, weekly options, and then check the numbers. Okay? All right. Let's go. First thing on the list. CAH, Cardinal Health. First thing I want to see, Cardinal Health. 104.90. The 105s are going for 94. That's just about 1%. Great. Like it. Let's take a look at the numbers. I'm going to say no. The reason why I'm going to say no, quickly look at this. The high of the year. She drops down, and look where we are now. Okay, that baby's ready to come down. I don't want to buy at the 30-day high. Sorry, 30-day high right there. Yeah, that's a no. Okay, next on the list. Comcast. CMCSA. 38.48, 38.50, 39 cents. That's over 1%. Here's the high. Here's the low. This is where it was. This is where it is. Okay, I want to take a look at that. That looks pretty nifty. Last 30 days. Down, up, down, up. Oop, this looks good. Look. Down, up. That's the high of the 30-day period. Low of the 30-day period. 3 days to the upside. I like that. What's it get me? It's get me 1%. There you go. Comcast works for me for this week. Next one, American Express. AXP, American Express. 231. Ooh, I like that. Check it out. 230, 190 to 232, 203, not 1%. It's not going to work for me. And yeah, no, sorry. Doesn't pay 1%. Next on the list, Cisco. CSCO. Cisco kid was a friend. 47.50, 47.50, 26 cents. That's a 0.5%. That's a no. See, that was quick. General Dynamics. GD, General Dynamics. 298, 300. That's a no. Look where it is. It's at the high of the year. That's a no. JP Morgan. JP Morgan. Okay, interesting. 199, the 199.97 to not quite 1%. See if I buy it at 199.12 to 200. Nope, got maybe. All right, well, let's take a look at here because that doesn't look that bad, right? It's at 300. It's almost $200. Okay, a year ago, 139, 135 is the bottom, 205 is the top, 90-day bottom. Here, 417, 178. She shoots on up, pulls back, up, pulled back. Now she's going to the upside. There's a possibility. Okay, check it out. A little uncomfortable where she is at the moment because you get 30-day high here, your 30-day bottom here. Look where she is. She's smack dab in the middle between the bottom and the top. Is that my imagination? 198.88. 198.95, 199.12. The market maker is going to be pushing into the upside. See how both of them higher? Okay, so I just went through 7 stocks in less than 5 minutes. It's actually that easy. Okay, do not make it more confusing than it needs to be. All right, so we're going to look at a couple more questions, then we're going to call it a night. 86, which is 4% per month and 48% per year. Hey, it's me. I'm not 100% sure where you get 4% per month and 48% per year. Because if I'm making 1% per week, there's 52 weeks in a year. That's over 50%. You buy your 100 shares, sell 1 call 3 weeks out from the EX date. Jimmy, that was spot on, dude. 100% accurate. All right, it's me. Yep, exactly 50% a year if you're lucky. Okay. All right, Jim. Whoops, I missed Jimmy's question. All right, Jimmy. Okay, what happens when you sell a call and the stock's slightly down and eats into your premium? It doesn't eat into your premium, dude. Let me give you an example. Okay. I'm trying to figure out how to give this example here. Oh, here we go. AEO. Yeah, we could look at Lowe's. Why not? Okay. All right, you ready? Ready, Jimmy? This is for you. Okay, hold on a second. Copies and pasties. I'd rather make a fast nickel than a slow quarter. I've heard that one many times. Yeah, but with a small account, it would be harder to make it work. Yeah, you're right. With a small account. Now, my grandson started out with $50. Granted, he's 4 years old, and by the time he graduates high school, he should hypothetically have over 300,000 if things keep going the way they are. 40 to $12 if it's a strategy. Yep. The crash has started, brother. Okay, John, thank you for that. Okay, what happens when you sell the call and the stock goes slightly down and eats into your premium? Jimmy, we're going to take a look at that right now. You ready? Okay, take a look. This is Lowe's. Okay. Now, I originally bought Lowe's April 8th. the second week of the second quarter. Now, I originally bought it at 238.62. I sold the 240s. I got 216. Not quite 1%, but I like those. Next week, I collected 57. Then I collected 75 because the stock went down. See, it didn't hit my 37.5. Stock went down. I collected 57. I collected 75. I collected 51. I collected 60. I collected 168. And the stock dropped down to a point where I bought more shares to do dollar cost averaging. So now I have 400 shares. And then I got 268. I got 17. I got 173. Then I got 153. And I finally got called out. I actually sold my stock for less than what I paid for it. Okay, so I paid for it 238.62, and then I bought 229. So my dollar cost average, I forget what it was, but I sold it at 225. See, I sold it for less than I paid for it. But if you look down here, Lowe's, my profit and loss year to date is still in the positive. So as I'm collecting all the premiums, what doesn't show on here are all the dividends I've collected. Okay, so I buy the stock, premium, dividend, premium, because I held it for the whole quarter. Okay, from the beginning of April to the middle of June. Okay, so I've held it for 2.5 months because the stock was here. She dropped down, she came back up a little bit, but each and every time I sell a premium against the position I have, it lowers my cost basis to the point where I have a profit. And as you can see, at this moment in time, I only have one loss, and that is right here, which is Albemarle. Now, it says that AEO is a loss, but it's not really a loss because I still own it. And I refuse to sell it at a loss, so I'll continue to own it until it comes back. The next one here is Wynn Resorts, down 1,200, but I still own it. Okay, so the only one I actually lost money on is Albemarle. Okay, $636. That's what I lost for the year. Now, I had Albemarle for a long time. Right, so that being said, that's what that is. We are at exactly 11:30. I'm going to answer questions, no more trading. So let's go to the questions and we'll go from there. Okay, what happens? I hope that answers your question. If you look at the volume on every big company, the dominoes are falling. Okay, John, thank you for that. Okay. Everything I've invested is down. All right. RJ30 pack. I'm not quite sure what that means because I have no idea what you're into. Jimmy, yes, I have no idea what you're talking about. You can start buying the long-term puts now. Okay, John, thank you for that. Marco, yes. Parkes. So you're up 53,000 for the year. Yeah, well, what percentage a week did you average on Lowe's? Sometimes it was 1%, sometimes it wasn't. In your example. Well, like I said, I think 2 weeks was over 1%, everything else was less. Marco, hey James, yep. What platform should I get started trading with? I like Thinkorswim. It's simple, it's easy. If you want to have a conversation with me, it's easier if you're on the same one. It says options are down. Sorry, I'm YouTube spying on your gains and trades. Okay, I am not hiding anything. I keep all my stuff on the open. Thank you, Doug. All righty. Did you do Walgreens stock? Let's do Walgreens before we wrap it up. Did you trade on Thinkorswim or do you link to your brokerage? I trade on Thinkorswim and I also trade on Robinhood. Yes, everyone charges per fee. Okay, so I'm going to look at Walgreens and that's going to be it for the day. WBA, here we go. Walgreens, tra-la-la, here we go. $15.98. I can buy it at $15.98, sell the 16s, get 56 cents. That is freaking crazy. I want to find out what that is right now. Clear that. Okay, so the 16s. Do you understand that? The $16 strike price is going for 56 cents per share. The stock price is $15.98. Okay, the closest strike price is going to be the 16. I got one for you. I'm sure you do, Jason. Again, I linked to Robert. I'm not sure. Bakaris. Set up Schwab account from my own TD Ameritrade. Yep, looking forward to giving this a try. Thanks, Jane Pakaris. You're welcome. Jason FWRD. Never heard of it. More than likely, if I have never heard of it, it's going to be a no. Okay, but if you'd like me to say no and tell you exactly why, I'll do that. But right now, people want to take a look at Walgreens. Okay, Walgreens has been in business for over 100 years. There's a Walgreens in almost every. What was that? There's a Walgreens in almost every major city in the United States. All right, so the premium, the $16 strike price is 56 cents. So 56 cents would be my profit for the week. And if I'm paying $15.98, I divide it by $15.98, the purchase price. And that would give me a grand total of 3.5% for the week. So here's your question, the $1 million question. Do I like Walgreens? Do I like Walgreens at 16? Because that's what it's at the moment. Okay, so we know the numbers work. Great. Let's take a look at the chart. And what is the chart telling me? Well, first thing, 5 things. A lot of 5s here. You ready? 5 things I want to see. The high, the low, where was it? Where is it? In which direction is it going? That's all 5. Okay. Now, a year ago, we're at 32. Okay, we dropped all the way down. That was the high, 32. The bottom, 1447. The last 90 days, that's the last 3 months. High, low, where was it? Where is it? Which direction is it going? You can actually see the momentum. Down, up, down, up, down, up, down, up, down, up, down, up, down, up. What do you think? Now we go to the 30 days. Okay, here you go. Last 30 days, no real rhyme or reason to it. 30 days ago, down, up, down, up, down, up. She should be coming down now, hypothetically speaking. Okay, here's your 30-day bottom right here on the 29th. That is actually the bottom of a 7-year period. If you're going to make money in the stock market, you buy low, you sell high. You cannot get any lower than the 7-year low for Walgreens, if you like Walgreens. All right, Jason, you really want to do FWRD? I've never heard of them. Oh, wow. I like that one. Are you stupid? That's a smart man just trying to understand how everything works. Don't have a lot of money to invest. Well, all right, RJ, you don't need a lot of money. What you need is consistency and time. That's it, consistency and time. All right, so it's past 11:30. Should I pick on this one last guy because he wants to be picked on, apparently? Okay. Jason, I won't say no, huh? FWRD. Okay, we should get a bet going here. I'm almost 100% certain I'm going to say no, but he thinks I won't. FWRD. Forward Air Corporation. Yeah, it's a big fat no. Why is it a big fat no? Number one, it's a monthly. Monthly numbers never work. That's number one. Number two, a year ago today, 121. They're at $18 at the moment. So, awesome. Right? So the high of the year, 121.85. The bottom of the year, 10.50. Okay. The last 90 days. There you go. Last 90 days. 31. Down, up, down, up, down. Market maker dropped it down. We got our bottom right here. Up, down. 4 days to the downside. Well, number one, it's a monthly. Number two, 4 days to the downside. I would prefer to find the bottom first. Okay, so here's the 30 days. Okay, your 30-day bottom. your 30-day top. Now she's moving to the downside. Well, I want to see it turn around. Hey, she's going to come down until she's done coming down. Now, what else do we dislike about FWRD? All right, let's go over here. FWRD. Okay, FWRD, 96-cent dividend. Okay, that's profit per year, 96 cents, 4.75% yield. Okay, now let's see what their dividend increases look like. Historical prices, dividends only. Oh, wait. Hold on a second. There are no dividends in the time selected period. Why the hell would I invest in a stock that doesn't pay dividends? Okay, it's the name of the trading group is Dividends for Weekly Cash Flow. This has no dividends. And you said that I wouldn't say no. I gave you 3 reasons why it's a no. 1, it's a monthly. 2, it's in a downturn at the moment. 3, it has no dividends. Why would I even bother my time with it? Now, if you think it's worth it, fine. That's great for you. But for me, no, no, and no. 3 no's in a row. It's a no. Crossfire. It's a no. Secretary. It's a no. 86. It's a no. 11. 4.5 dividends. What, Marco? How about, yeah, no, we're done for the night. User 92, 23, 30, whatever. What time is your podcast? I would like to listen. All right, the podcast in the morning, that's members only get live access to that, but anyone else can just listen to it delayed. Okay, it's available on any podcast that they have podcasts. It's like over 900 episodes. It's a lot. All right, so all that being said, this is James from Dividend Stock Talk, wishing you all a wonderful evening. All right, and we're going to finish there. And we're ending there. And you guys have a great night, and we'll see you again tomorrow. Hey, this is James from Dividend Stock Talk. You have a great night, and we will catch you again on another episode of Dividend Stock Talk, brought to you by The 10-Minute Trader, where I invest in dividend stocks for weekly cash flow for that safe, predictable, consistent 1% per week. Have a great night.